So number one, I look at the market direction. And if the market direction is bearish lately and I'm taking a call position, I'm probably fighting the trend. I'm saying the market's going to go up when it's generally going down. So if I want to be correct most of the time, I'm going to be in the put position. Now we have Love who asked me that I remind them about the rules. So Love has been following the same strategy now going on 4 weeks, where every time the market spikes, she's buying put contracts. Now, why can she take an attitude like that? Because the market has been bearish in 8 out of the past 11 days. And yes, there is inflow into the SPY. So there are institutions, there are hedge funds, there are different companies that have to purchase into this market. They called rotation. What they do is rotate. So one day there'll be an energy and they'll say, okay, energy topped out on Friday. Let me take my energy stocks to healthcare, to Dow Transports or shipping companies or something to that extent. So there are people that must remain bullish in the market. So yes, there are still always going to be people that see value in the market, but earnings were extremely important. Forecasting for this upcoming week is extremely important. Understand, SPY will lead the market. So if the SPY is between different levels, and I'm going to tell you, it happens every 4 points. So I'm going to start you off on the low side, 398. From there, 402. From there, 406. From there, 410. Meaning you could keep adding 4 points. Each time it breaks a level, it's going to go and visit the next level. So if we see on Monday that the SPY opens up and it goes under 410, guess what? It's probably going to 406. And if it breaks 406 to the downside, it's next going to revisit 402. Now, do I mean that's happening on Monday? No, it doesn't happen on Monday, but know the different ranges of the SPY when you're trading Monday or Tuesday, because no whether you're saying, okay, the market's going to recover, the market's going to get worse. You have to pick the right entry point. If you pick the wrong entry point, you're going to look at your phone and you're going to say, I'm down 20%. Now, I had a conversation with someone from Robinhood. I said, you guys want to improve your platform? Here's what you do. You need to work in AI into your trading platform. So it analyzes someone's trade. So I'm going to go and enter a trade on Robinhood. Buy this for $3.80. And Robinhood would say, your trading strategy is generally off 18% when you enter into a trade. When you buy into a trade, within 5, 10, 20, 30 minutes, you're down 18%. How about you put in a bid for 18% below your current bid of $3.80? And I'm like, okay, so 60 cents lower, $3.20. Okay, boom, that makes sense. So just because Robinhood doesn't have that app using AI, you can still do that for yourself. So I do that for myself all the time. I tend to miss the bottom by 12 to 14%. So if I miss the bottom by 12 to 14% and I'm going to buy an option for $1.02, I say, okay, let me go 14 cents under that. Let me go $88. So that's a rule. So the next rule is trading times. You don't want to trade between 9:30 and 10:30 a.m. The bid and the ask, the spread between is too wide. Meanwhile, someone's asking $1 for an option and they're asking $1.40 to sell it. So yes, if you can get the bid for like $1, you think you're doing great. And then the stock goes down and now the bid and the ask is 80 to 90 cents. So you got it at $1, even though it was selling at $1.40, but it's currently at 80 cents. So you're still down 20%. Do you understand why we don't trade now between 9:30 and 10:30 a.m.? Usually around 15 a.m., there's a fake out. So if you see the market recovering at 11 a.m., get ready for your entry point because there'll be a fake out where it turns down and it can recover. Vice versa. Market's getting sick and all of a sudden you see a recovery and you're like, no, that recovery is a fake out. But it's called an entry point. It's something you're waiting for because even if the market goes down, it's not going straight down. And if the market goes up, it's not going straight up. You have your strategy and you have to know your entry point is most important because that determines your strategy. I did a whole video on my procedure, what I do the evening before in my planning. I pick out 2 or 3 stocks. I say if the market is going to be green, I'll play these 2 option positions. If the market is red, I'll play these 2 option positions. Remember, I did a video on Shopify when Shopify was $700, and I said it's probably going down 40%. The true value of Shopify might be $170, which means the market has to get really disgusting because Shopify is still, I believe, over $400. So if it's going to lose another 50% of its value, in my opinion, then the market would have to get extremely ugly. So let's say a prayer that doesn't happen. But if energy spikes to $150 a barrel, if the war between Russia and Ukraine continues, if our inflation and our CPI numbers, which I believe are coming out probably on Wednesday, are high, Wall Street's looking for them to come down a bit. But if they come in hot or high, then the market's in trouble. If the Fed seeks to raise interest rates 50 basis points in June, July, and September, then the market is in trouble, which is why Love's strategy about buying puts on the spike is a good strategy. Even if the market is strong for 2 consecutive days, if it's strong and you buy puts and it's stronger and you buy puts and you buy twice the position up here and once here, when the market finally goes down to the first position, you're already 33% profitable. So you have to understand, are you bearish or bullish on the market? There are some stocks that look good, but overall market sentiment for 10 out of the last 13 trading days, market sentiment is bearish. And yes, the counter position is there are people that are buying the SPY at these levels, but they're going to continue to buy the SPY from where we are at 411 or all the way down to 390 because they don't time the market. So if it goes down from 410 to 400 to 390 and they buy 3 positions, their average is 400. When it spikes from 390 back to 400, they're broke even. They're at a break even point, and you're calling them a sucker for buying now. No, they're planning ahead. The way I trade, I'm looking for tomorrow, meaning I'm looking for Monday. At the end of Monday, I'm looking for Tuesday. So check out my other videos, and I'll see you guys soon.